you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? Welcome to Weekend Recap on the Courtside Financial Podcast, a segment where we bring you a compilation of everything that went down throughout the week from a stories perspective. Before we get into this video, make sure you hit the like button, make sure you hit the subscribe button, and click the notification bell icon so you don't miss out on any content that's coming in the future. Many investors and enthusiasts alike are keeping their eye on NIO for good reason. But today we're going to take a look at a unique perspective from the Shanghai Intelligence Bureau in China. They've got some interesting thoughts on what NIO should consider if they want to take the high-end vehicle route. To kick things off, let's take a trip back to 1918 in Italy. Enzo Anselm returned from war with his life in shambles. War had taken all of his family's wealth and he lost loved ones as well, but that same adversity is what pushed him to create Ferrari. What's interesting here is that Ferrari's success isn't just about building luxury cars. There's a lot more to the story. Enzo started off as a race car driver, and building a car company was the byproduct of that. Ferrari only built its first car in 1947, but they had been racing since 1929. Racing was the cornerstone of their journey to luxury. So why is racing so crucial for car companies? Well, the answer is because it's a powerful catalyst for the development in the automotive industry. Racing pushes the envelope of technology. For example, think about turbocharging. It was initially used in Formula One racing, boosting horsepower and torque without increasing displacement. This technology eventually trickled down to consumer vehicles, as we're seeing many cars today are turbocharged. Racing clearly serves as a testing ground for new technologies in this sector. Take Lynk & Co, for example. They invested in racing, improved their technology, and it's reflecting of their vehicle. They sold out and had to produce more vehicles because of their racing-driven advancements. But it's not even just about technology. Racing is a marketing powerhouse. When you win on the track, you can set the price. As they say, a trophy is worth more than 1,000 press conferences. So let's take a moment to appreciate NIO's ambition. They've entered into international electric formula racing, competing with other luxury brands. And this obviously showcases China's impact on the high-end market. Unfortunately, NIO had to sell the team due to practical reasons, but still, it's an essential part of their journey. The road to high-end in the electric vehicle market is different to that of ICE vehicles, of course. We can't merely copy and paste the old racing model. In the era of electric vehicles is about smart driving and the systems that power it. The competition is no longer just about drivers, it's about the technology behind the cars. So what kind of racing should we focus on in this new era? Well, let's brainstorm a little bit. First, we have autonomous driving. Imagine closed tracks with obstacles simulating emergencies. NIO could simulate their technology in real-world examples here. Second, with electric vehicles, there's always the challenge of battery life. We could see NIO put their vehicles and technology to the test in extremely cold climates. Then obviously there's a safety challenge. Electric vehicle manufacturers put their vehicles to the test in crash, submersion, and burning scenarios. They'll see which vehicles can withstand the most. All these challenges not only test innovation, but they provide entertainment as well, which is, going back to one of the points that I made earlier, is free publicity, free marketing. Here's the bottom line, is that electric vehicle companies aiming for the high end shouldn't compare themselves to traditional car companies. It's a different race altogether. Instead, we should aim to create new energy supercars that can compete with the best. And this can definitely drive the rise of domestic high-end brands. So NIO investors and enthusiasts, the message is clear. Racing isn't just about speed, it's about progress, innovation, and marking your place in the world. Whether NIO rebuilds its racing division or not, the path to the high-end electric vehicle world seems to be paved with technology, innovation, and a little bit of a racing spirit. Today we're taking a look at battery technology pertaining to CATL and NIO and how this could potentially benefit both parties. In a previous episode, we talked about how CATL could potentially be reducing the cost to NIO for their batteries, as they are one of NIO's primary suppliers when it comes to that. So what's the big news? It's the Shenzhen super fast charging battery. This battery was developed by CATL and Contemporary Amperex Technology Company Limited. This battery is poised to change the EV landscape, and right now it's causing quite the stir amongst the news outlets. Chery Automobile, in partnership with CATL, recently announced its plans to implement this technology in their new upcoming Stera model. So what's so special about this battery? It's designed for super fast charging, and it's expected to hit the market in the first quarter of next year. But what's even more exciting is that Chery and CATL are eyeing global expansion like many other companies. Their plan includes entering markets such as Europe, the Middle East, the ASEAN markets, and even North America. The super fast charging battery is already gaining popularity, and it could potentially be adopted by various brands. The potential developments of this battery are captivating as it signals a shift in the EV industry. Just a while back, on October 10th, rumors started circulating about the battery giant CATL. The Chinese battery power giant was reportedly reducing the prices of its batteries to certain manufacturers. Why, you ask? Well, it turns out the cost of lithium carbonate, a crucial element in battery production, is dropping. This move from CATL is estimated to contribute significantly to the gross margins of certain companies as well. Among those companies rumored to be receiving these benefits is NIO. So what's the big picture here? This is about more than companies just getting a pricing advantage. It's signaling a broader trend in the EV industry. CATL's decision to lower the prices of their batteries is sending a clear message to other automakers. Battery prices are negotiable, and they're likely to continue falling. Now, NIO could potentially implement this super fast charging battery that's going to be releasing in Q1 too, and so there's implications associated with that as well. Number one is obviously an optimized charging experience. With faster charging times, NIO users could spend less time charging and more time on the road, which obviously is going to benefit user experience. There's obviously increased range and efficiency as well. NIO vehicles that could be equipped with this battery could travel longer distances as a byproduct. Three is that it gives NIO even more of a competitive advantage. Faster charging times is a significant selling point for EV buyers. NIO's integration of this technology could help them stand out from the competition. Then obviously there's an opportunity for more of a stronger partnership and collaboration between NIO and CATL. NIO has not confirmed that they'll be taking on this technology, but like I said earlier, CATL is a strategic partner for NIO, and this could be something that's obviously beneficial to NIO as they continue to develop their own batteries, but it could be a bridge the gap solution for a lot of the problems that EV owners face today. By working together, they could push the boundaries of innovation and make EVs even more accessible and appealing to the masses. I think NIO should take this technology serious, because by doing so, they have the potential to revolutionize an entire industry. Doing so would bring us one step closer to a future where EVs aren't just sustainable, but also incredibly convenient and efficient. In conclusion, this exciting news about the super fast charging battery offers a glimpse into the exciting evolving landscape of electric vehicles. While we don't have official news about NIO adopting this battery, it highlights the ongoing developments and challenges that EV companies face as they navigate these market dynamics. Only time will tell if NIO's various gambles will pay off. Recently, a significant shift in NIO's business portfolio has been raising eyebrows. The company you know for its sleek electric vehicles has just expanded into new territory. They rebranded Hiding Insurance Brokers to NIO Insurance Brokers. Well, what does this mean, you ask? It's not just a name change, it's a strategic move that's causing quite the stir in the industry. As we discussed earlier this week, this is NIO's push to get into the insurance game. Now, NIO isn't alone in this journey. They've got some high-end competitors like BYD, XPeng, and even EV giant and well-known pioneer Tesla. They've all set their eyes on the lucrative market of auto insurance. But what's the big deal with all these companies getting into the EV insurance arena, you might wonder? Well, Dong Hao, an industry veteran, points out that new energy car companies can excel in damage assessment and premium estimation. This gives them a leg up over traditional car companies. It's like they've got a secret weapon in their arsenal. So the big question that we're facing today is, can this insurance venture really drive NIO's ecosystem further, especially when they're already juggling mobile phones, a charging company, and other ventures? NIO having its arms in so many buckets is a puzzle that keeps the industry on its toes. Alright, so let's get into the nitty gritty. According to statistics, the EV market in China is booming. It's like a rocket ship ready to take off, with millions of EVs hitting the street every day. This, my friends, creates a vast blue ocean market for electric vehicle car companies, especially as it pertains to the insurance market. It's estimated that by 2025, new energy vehicle insurance premiums will hit a staggering 186.5 billion yuan. This represents a significant slice of the auto insurance pie. So it's no wonder that NIO and its peers want a piece of this action. They invested in HIB, hiding insurance brokers, and that led to the birth of NIO insurance brokers. The acquisition cost? Well, it's anybody's guess. When BYD acquired an insurance license, they spent 4 billion yuan. You could say NIO was trading money for time, buying chickens to lay golden eggs instead of waiting for their golden goose to appear. Alright, so you might be wondering what's next on this roller coaster ride. Zhang Xiang, an automotive industry expert, says that NIO's journey is just beginning. It's like a chess game, and NIO's making the moves to tap into precise customer groups. But there's a twist in the tale. New energy insurance isn't a cash cow yet. It's more like a calf finding its legs. There are high underwriting pressures, and this might be a tougher game than NIO anticipated. Now here's where the rubber meets the road. NIO has the license, but do they have the firepower? The insurance market for electric vehicles comes with high compensation pressures and significant losses. The accident rate for new energy vehicles is almost double that of traditional cars. With an increase in EV travel, underwriting costs are piling up. Shen Hongwan's research report paints a gloomy picture of a loss ratio of over 85%. So in this industry, there's immense pressure to keep the ship afloat. You see, it's not just about having an insurance license. NIO needs to find serious financial firepower and technical prowess, and a network that covers all bases associated with this type of industry. Without that, it's like entering into a battlefield without ammunition. Okay, so here's where it gets even juicier. NIO isn't just playing the insurance game. They're crossing borders like there's no tomorrow. You've got mobile phones, charging stations, and now NIO insurance. It's like NIO keeps on expanding into territories that just make them look like less of an automobile manufacturer. Take their mobile phones, for example. NIO users have their very own mobile phone. But the question is, do NIO users really want NIO phones? Many are scratching their head wondering if NIO should focus more on cars instead. It's a story that's getting plenty of attention and drawing so many headlines every single day. And then there's the charging infrastructure. NIO's got a network of battery swapping stations and charging points. They've invested billions, yes, with a B, into these charging stations in this network. But the reality is that today they're not raking in any profit. In fact, NIO's even struggling to break even with their battery swapping stations. Some feel like it's investing in a gold mine but only finding fool's gold. So while these ventures look good on paper, they're not exactly adding gold bars to NIO's gold vault. So what's the verdict then? NIO, the electric vehicle giant, is marching into various territories, and they definitely got some cool toys up their sleeves. But they're clearly facing growing pains, and it's unclear as to whether the diversifications will work out. It's a high-stakes game, and NIO shareholders are watching closely. As competition in the electric vehicle industry heats up, NIO's continued expansion into different market segments and everything might be a double-edged sword. While it's exciting to see NIO's growth, it's vital that they don't spread themselves too thin. Only time will tell if NIO's various gambles will pay off. That's going to be it for this episode of Week in Recap for the Courtside Financial podcast. If you found any of this information valuable, make sure you hit the like button, make sure you hit the subscribe button, and definitely leave a comment down below. Genuinely interested in hearing what you guys think about these this new style of videos that we're doing. Anyways, that's going to be it. I'll catch you guys next time.